All right. Hey, gang. Hope everyone's doing well. We should be good to go. Welcome to the Thursday pre-market morning show. I'm Raghee Horner. Thanks for joining me. If it's your first time, welcome to my office. And if you've been joining me here for the last few episodes, we're going to be doing what we have been doing for the past, 2 weeks now. And that is you're just joining me for my morning pre-market prep before I head on over into the Simpler Futures room. Today's Thursday, so I'll be trading live with the group there. So what am I setting up as we're preparing for the day? So I'm going to jump on over to the charts here and we'll talk about what's going on. And I'm going to make sure I can see any of the chat questions. Hey there. Good morning, Fernando. Good to see you. All right. So let's take a peek at, there we go. Make sure I can see that chat. All right. So what we're taking a look at right now is the Russell. The Russell was the chart in yesterday's free video for the commentary that I send out for Simpler Futures. Yesterday's free video, I mentioned that the Russell is the index contract that, and from a broader sense, index, sector, stock. Okay, gang? So from a broader sense, it's the Russell that I've got my eye on today. We've got the 1600 major psychological level sitting below. We've got the 21 period exponential moving average sitting below. Let me take a step back and talk to you about these levels. So first of all, the 1600 level, when you take a look at the way in which order flow tends to congregate at certain price levels, you'll notice that numbers that end in zero, it could be a decade level, it could be a century level, it could be a 000 millennial type level. I'm just talking about how many zeros are following. So 10, 100, 1000, those are levels that tend to congregate a lot of price action. There's decisions being made there. It's a battleground, if you will, for the bulls and bears to determine who's going to own that. Is it going to be support, meaning the bulls own that level? Is it going to be resistance, meaning the sellers or the bears own that level? So we're always looking to see who's going to ultimately own that level as support or resistance. So 1600 is something that I'm for now going to presume, since we're trading down to that level, that the bulls, the buyers, synonymous, right? That the bulls, the buyers still own that level. That level also happens to be just a hair below. You can see right there about 10, 11 points below at 1600 level. Just below is waiting the value area low. You'll see that green line that's sitting there, the shorter green line. That is the value area low for the month of October. It's a volume derived support level. Every single one of the support and resistance levels on my chart. In fact, you've never seen me in this session, nor will you see me in live trading sessions, draw manual trend lines, okay? Won't do it. Too subjective, and most of the time people don't have a process. They just pick 2 points, they play dot to dot. Gosh, I don't find them to be necessarily as accurate as the folks who are drawing them, including myself once upon a time, hence I don't do it. I do have an automated trend line drawing tool. I used it for the better part of a decade or more on my eSignal package, on my eSignal platform, and I had a package that ran that, which was excellent because it automated things that subjectivity. We're human, right? Unless your father was Spock and you're part or full Vulcan, your biases and your emotions are going to play their way into subjectively drawn technical analysis. So what's the easiest way around that? What's the easiest way to become Vulcan in your trading, or at least your analysis? It's to automate. You know the process, now automate the process. And that way it's done instantly, and you are not subjecting your charts to your subjectivity. All right, so when we are looking at the Russell right now, I do want to remind everybody of this. Short of the KRE, let's jump on over there real quick. Short of the KRE ETF, there's not a lot that I'm going to say we have this high-weighted concentration, this high concentration weighting effect on the Russell. It's one of those rare and might I say, in the scope of trading, sort of evenly weighted. Everyone has a say. Very lots of stocks, very, very huge ETF 2000 stocks, and none of them have an outsized weighting. Outsized weighting helps us as traders. May not be great for investors necessarily when the market takes a downturn, but it's great when the markets are going up. Hence, these ETFs are built that way. And high concentration weighting is an edge for us if we're trading. Mostly options is what I'll do, options on ETFs. Okay, so I am very interested in how I can get long the Russell. I think the KRE is going to be a kind of interesting ETF to watch to see if it can, and this is going to help the Russell, by the way. These are regional bank stocks. I would like to see if we can get above the 200 EMA and the mean of the V-score. Now, I mentioned I'd talk about the prop dots for a moment. Except for the 34-period exponential moving average, except for that, I do not use regular moving averages. I don't use a 20. I don't use a 50. I don't use a 100. I don't use a 200 simple. Okay. Not that there's anything wrong with that, but I just don't use them. I've got other moving averages to replace them. And I believe that humans in the market are ruled by recency bias. And so exponential moving averages, which simply weight the more current price action heavier within the average, is exactly what I want to be focused on. So I'll use exponential moving averages, and I'll use that recency bias to our advantage. And then additionally, I will use, it's a free tool, by the way, called Propulsion, to take advantage of, for example, in the RTY, I mentioned the 21 EMA was in play. And how do I know that? Those green dots, imagine playing a dot to dot and connecting each one of those dots. That would be where the 21 exponential moving average would be sitting right now. But we all know, and if you don't, I'll tell you right now, moving averages are awful in non-trending markets. You don't want to pay any attention to them. Maybe the exception of the 200 because it's very much a psychological line in the sand, but the technical analysis validity of moving averages in choppy markets is zero. Don't pay any attention to them. So one of the problems is moving averages don't know when to sort of shut off. And a lot of traders don't know when to shut them off. So what we have here is a self-correcting moving average. And again, it's free. It's free on TradingView. It's free on TradeStation. You can go into the respective app stores for both of those and download them for free, activate them for free. And I'm still waiting on Toss to get with the program and put this on Thinkorswim. We have submitted it. So I'll have to have a separate download page at some point for our pre-market show, so you guys can download some of these tools that are free. All right. So what am I taking advantage of with that propulsion? Check this out. Write this down maybe. 8 crossing the 21. So when the 8 crosses the 21, when near-term momentum crosses that slightly longer-term momentum, if you will, the 21 is now valid. You can use a 521. That's another pretty popular setting, but I use an 821. Okay. So play the moving averages in a trend and use propulsion, and it's going to basically put you in an environment where you're using the right tool at the right time. Okay, so just a little, and that's why I'm interested in the propulsion dots right now at specifically the 21 exponential, and it happens to be sitting at darn near the same level as a 34 EMA on the high and the value area low for this month. Remember, moving averages are price-based tools. When I talk about value area highs, when I talk about the V-score, my indicator that I have sitting at the bottom of this chart, those are volume-based tools. All right, so let's move on to, we're going to take a look at the calendar. We're going to take a look at whether or not we have gap psychology. The gap psychology, it's going to be kind of close on the Dow, but I don't believe we're anywhere near it necessarily on the S&P and the NAS. The reason I say that is, we're not going to get, I don't believe we're going to open, 12 after 9. Yeah, I don't think we're going to get down below 34.20 before the open. Yes, we've pierced it, but we're not going to open below yesterday's low. So I don't believe this is the kind of gap psychology that I want to take advantage of. And I believe ditto on the NASDAQ. Yeah, we're nowhere near that. Nowhere near. And one of the challenges right now in the market is I'm below this sort of rolling 10-day moving average that I like to focus on. Let's re-anchor these so you can see them at work. So I have this October anchored moving average. You can see right there, which we're just below. But then I also and that really should open up potential shorts in the NAS. Then I've got this rolling sort of 10-day-ish VWAP. So I say ish because if it lands on a weekend, I'm not going to anchor it to the weekend, although you could, if you want to keep more of a strict interpretation, 10 days. And I'm talking 10 calendar days. So notice we're below that, and we have been for a while. And look how the sentiment has been very bearish since we've been below that. And then we're below the 1 month. So the NAS, I should be open to bearish directional bias on the NAS. I don't like an environment where technically and volume-wise we say, yes, let's short this. But on the other hand, any kind of optimism about stimulus is going to say, I don't care at all about technical analysis. This is the news. Remember, there's three psychologies at work all the time in the market. You've got this technical analysis. You've got this sort of price-based view, and I would throw volume in there as well. And then you've got news, fundamentals, macro, whatever you want to bundle up in that. And the fact that volume-wise we're below on the ES, you can see this is happening too. We're below the 1 month anchored VWAP. We're below that rolling 10. I should be open to shorts here. The problem is that's technical analysis thrown in with some price and volume. If we get news about stimulus, do you think it matters that the technical analysis is bearish? No, the stimulus news is bigger than that. It's more powerful than that. And it's going to drive the market higher. So for those of you that are wondering, especially those of you that took my day trading class or are with me in the futures room, you might say, Rob, technically, we should be bearish because we're below these key levels. And we're not in a double green market. We're not in a strong uptrend. And that is true. The reason I'm not committing is I just don't want to be sitting through a face ripper when the market, that's a rip higher, when the market gets news of some sort of kumbaya moment. The market is, think about it this way also, gang. Do you think the market really, truly believes? And let me make sure I'm keeping up with any questions here. Good morning. All right, very cool. Hey there, Fernando, Sun River, Coatings, good to see you. Hey there, Rich Darnell, Mark Tremblay, good to see everybody. So one of the things that I want to mention is that with that looming over us, the market doesn't think that it's not going to get stimulus. Yesterday's beige book probably emphasized and what the Fed's been saying for a while. We need stimulus. In fact, investment from businesses is going to continue to stall. They're going to be playing it safe until we see more stimulus. So, yeah, I think the politicians have their back up against the wall here. And it's going to happen. Now, whether it happens before or after the election, does that mean if it doesn't have to happen before the election, it's not going to happen at all? I don't believe that to be true at all. So whether we get it now or later, I think we're going to get it. And it's very difficult in this environment, in light of that, to be overly bearish the market. So what I will do, and this is what's so great about having fluency and fluidity in not just the futures indices, but also the ETFs. Because remember, you're playing futures in ESNQYM, RTY, you're playing stocks. You're a stock trader. No matter, even if you want to call it futures, and yes, you're executing these orders through a futures broker, you are a stock trader. So our job is really going to be now, can we find sectors within our indices that have relative outperformance, that are not sitting below these key levels, like the IYT, right? Now, one of the things that a lot of traders who are first learning about how to use sector analysis in their trading, and this is something a lot of noobs do, they don't get it. If you're looking at a sector, don't make it up. In other words, a lot of traders just say, well, certain types of businesses should be included in the transports. No, that work's already been done for us. We already know where the flow is. Don't go reinvent the wheel. Look at where passive investing is pointing to. And I see this all the time. And again, it's a typical noob mistake, and they'll learn. I won't want you to have to go through that learning curve. When you are trying to understand what's in the transports, go look at what's inside the transports. Don't just say, well, this particular business would be included in the transports. No. Transports, the IYT, if you go to Yahoo, if you go to ETFDB, if you go to any number one of the any financial website, they will have holdings for these sectors. You want to know what's in the communication sector, you want to know what's in the transports, you want to know what's in semiconductors, you go look at what's actually weighted within them. You don't get cutesy and curate your own little list. That's not what works, because you want to know where the flow is at, right? Do you understand the difference? A lot of traders, and when I watch, chuckleheads on financial media, or I just watch analysis from folks who are curating their own little watch lists, what matters is where the attention is at, okay? I've been trading for a long time, and I don't even curate my watch list. What do I mean by that? I don't pluck things out because I like them. I pluck things out, I separate things out, I group things together, however you want to look at it, based on the passive investing and the amount of attention that will be placed on that stock, because it's already in this school of stocks swimming together, right? Think of these stocks like a school of fish, right? They all tend to move together. Some are bigger fish, some are smaller fish. The school could be big, the school could be small, but they all tend to swim together. Got it? Know what's swimming together. Makes sense? And you can find that information freely on the internet. Steer away from curated cutesy watch lists. Okay, don't do it. All right. So, and why am I telling you that? Because once upon a time, decades ago, I didn't know any better. I thought I was going to be a stock picker. No, the market's already done it for you, right? What we need to do is focus on this relative performance within these pre-made schools of stock. Yeah. All right. So, who would have thought Amazon would be an Excel? Exactly, Alex, exactly. So if I pick Amazon and I don't understand the impact Amazon has on the XLY, but also the QQQ and the NASDAQ futures, exactly. Now, great point. All right, gang. So I hope that helps as far as, and I got to get into the chat room here, but let me take you on over to the calendar. You guys know we spent an inordinate amount of time in the trading economics calendar and the Forex factory calendar. Go check it out. We've already had, as you can see here, unemployment claims came in way under expectations. We've got existing home sales coming up at the top of the hour at 10 o'clock, natural gas storage at 10:30. I'm not touching natty gas right now. It is a political hot potato. Okay, so I'm going to go see here in about 10 minutes if we have any surges, if we actually have some gap psychology in play. I'm not holding my breath, but we're going to go about looking at the relative outperformance of these individual ETFs and the stocks within them. This is a multi-chart of the XLY. I can do this on an end of day basis, meaning a daily time frame. I can do it on a 1 minute if you want to be more of a day trader or intraday trader. All right. So think about that, process that, and we'll talk more tomorrow. All right, gang, have a great one. And I will see you tomorrow at 9. All right. Be good to each other.